if you don't mind, in your own words, give our listeners and viewers a high-level understanding of how does this token tie in, and what is the long-term vision that you see in SLX helping grow the protocol.
All right, let me give my marketing one-liner, and then I'll let Ben take over. Which is, if you love EUSX and delta neutral yield, you're gonna really love SLX.
Hello and welcome back to another exclusive and exciting Boom Room interview. This is Sasha and Carmelo with Arcanum Ventures, and today we are welcoming two of the co-founders and C-suite members of Solstice Finance, Ben Nadareski and Ryan Day. Solstice Finance is a protocol that pioneers permissionless institutional grade yield on Solana. They've since launched their real-world asset USX late last year to enable what they're referring to as yield as a service infrastructure to tokenize funds, trading strategies, on-chain credit, and more, providing safe and real yield for everyone. Ben, Ryan, it's a pleasure to have you on the show. Good to see you as always. Ben, how are you doing first?
I'm doing well, guys. Thanks so much for having me. And it's great to see some familiar faces around the table here.
Awesome. It's good to have you. Ryan, how's it going with you, man?
It's going all right. I'm out of water in this house right now, so I might be a little dry and hoarse as we're having this conversation, but they said that they're going to deliver in a couple of hours, so maybe it'll come in between now and the end, and then you'll hear the angelic golden pipes coming out. But outside of that, perfect. Happy to be here with you all.
We don't want you to speak less. So
I know. Don't worry. I would never speak less. That's not in my dialect.
Oh my goodness. All right, guys, for our viewers that don't know, we've been working with you guys for pretty close to a year, maybe like 8 or 9 months on a number of different fronts. Solstice Finance, I'd say, is one of the more exciting companies within our portfolio, and the experience of working together within the worlds of risk management, infrastructure, protocol design, and tokenomics has been incredible. There's so much happening within Solstice Finance, and there are so many different types of products and offerings. So let's kick this off first with maybe a very, very simple rundown for our viewers and listeners. What is Solstice Finance, and what does it hope to achieve?
Absolutely. Absolutely, guys. So as mentioned, I'm Ben Nadareski, co-founder and CEO of Solstice, and we set out with a very clear mission in launching Solstice, and that was DeFi simplified. We wanted to access DeFi to everybody across the world, all the complexities, all of the nuances, all the technology that has been advancing at a light speed across the industry. And we wanted that access to be all across the world to both retail and institutional users at the same playing field. Traditionally, in all of the hedge funds around the world and all of the key investment managers, there's a high watermark to entry. There's a high barrier to getting access to leading strategies. And at Solstice Finance, we simplify that process for all users. Doesn't matter who you are, whether you're an account with millions of dollars in the bank in the US or you're an account with 5 pesos in your bank in the Philippines, does not matter. You have access to the same institutional grade strategies, all powered by DeFi. So now at a core level, Solstice is designed very simply. We issue a USX token, which is 1-to-1 pegged to the US dollar. And with that USX token, you have access to one-click yield strategies across the DeFi portfolio. We've led this in the protocol with EUSX. That is our leading protocol right now for design for yield. That accesses a delta neutral strategy out into the market. And what that means is that we're not taking a directional bet on individual Bitcoin, Sol, ETH, or individual assets in total. We're taking a directional bet. We're taking a arbitrage bet on the fact that there are market inefficiencies that can be continuously traded on and accessible to all user participants. This is a trading strategy that's led to double-digit yields for several years in a row now that we've been running at the Deus Ex Capital level that we've now integrated into the Solstice protocol. So we have EUSX, EUSX, and several new products to come on the horizon where you'll have one-click access to several different institutional yield strategies.
Fantastic. And I know you guys, we started talking a lot around tackling the DeFi opportunities specifically within Solana. There's been so many discussions over the past year about Solana emerging as more of an institutional home for a lot of different traditional financial operators that are looking to break into tokenized real world assets. We had spoken with the head of product at Solana on this show, I think over a year ago, talking about how that has been a primary focus for them outside of, coming off the end of the sort of like meme coin cycle that they went through and developing a lot of incredible infrastructure there. From your perspective, why was Solana the most important thing to tackle now? Because I know maybe there have been some discussions about expanding across opportunities into other ecosystems in the future.
Absolutely. I'll start with this and pass to Ryan. The major thing was this. Right off the bat, there was a gap in Solana to really hone in on an institutional grade yield strategy, accessing RWA yield, accessing institutional grade strategies. That type of play was not as prevalent on the Solana ecosystem as we've seen in other protocols and ecosystems, like we've seen in the Ethereum ecosystem, for example. With Solana, you have the most amount of users in DeFi on Solana compared to any other L1. You have transaction finality down below 400 milliseconds, which is a great threshold coming to break with upgrades, including Alpine Glow and others. You have a wide suite of DeFi applications that are fully integrated and composable with each other, working together as opposed to against each other. All of these combine for an effect that allows for a DeFi participant to enter once into the ecosystem and get the full suite of access that you would expect from DeFi. And that was the opportunity that we saw at a high level at Solana.
Yeah, I mean, the thing that people often think about is they say, why would you go build on Solana when all of the TVL is on Ethereum? But if you look at what's actually happening in the DeFi ecosystem, right, there's more. I think even though the TVL is what 1/5, I don't know the specific numbers off the top of my head of what the TV on Solana is what the TVL is on Ethereum. There's higher DEX activity. There's higher user numbers, like daily active users. And, that could be bots using wallets, all that kind of stuff, right? But if you want to build in a space where there's growing activity versus kind of stagnant capital, that's that combined with what Ben was saying, right? There's this target market where a lot of the primitive that you're seeing roll out on Ethereum hadn't been built on Solana yet. It's a little bit more. It's much more targeted to try and build on Solana versus just copying what's kind of hot. You just copy the EVM smart contract, put your own thing on it with a little nuanced spin, and then kind of go to market as fast as possible. You really have to build from the ground up in the Solana ecosystem. So it's a lot harder, and what that means is the teams are a lot more focused, a lot more strong in execution, and they really know what they're trying to build for and the customer they're trying to solve for. And so that's why it is. That's why Solana is such a great place to build. I think one of the other things too is, everyone used to rag on Solana for being down all the time, right? Like, I can't believe Solana's down again, all this kind of stuff. But it's the only chain that has had to deal with an influx of users at such a capacity that it was put in stress, right? Like when Trump Coin launched, right? It was the number of users on Solana when Trump Coin launched was more than any user on any other chain at that time combined, right? And so they were stress tested to the max, and they're still offering, like what Ben is saying right now, 150-second or 150 millisecond finality, which is crazy when you think Visa's finality is about 2 days. So there's just a lot of these little perks that when you think about, if we are trying to revolutionize and evolve finance to this next tier, this next level, like you got to do it you have to play at a completely different level from the underlying infrastructure stack, and that's what Solana offers.
Yeah, it seems like Solana's moving away from this meme coin reputation and more towards institutional finance, and actually the whole entire crypto space as a whole. But have you guys seen this translate into any actual value for regular users yet? Because we're seeing an influx of capital from Wall Street and massive institutions. But have you seen that effect take any effect basically yet?
Yeah, I mean, I think I was just gonna say, like, what's happening, right? It's like a lot of people came in because they were like, how can I make 100x on a meme coin? And then they're like, oh wait, like I'm not part of a cabal, like how, whatever, I'm gonna lose my money on something. And then they actually, now they're in Solana, they have money that's been come from Coinbase or bridged over from somewhere, right? And then they start looking around at their options. They're like, I can get like a pretty stable low risk yield that's like risk adjusted through something like Solstice. I can go lend and borrow on Camino. I can go, if I want to get super advanced in DeFi, I can go start looping things on Loopscale, right? I can go into Exponent and start doing PTYTs. And they learn about all of these different things from just having been in the ecosystem. Because even when you're trading meme coins or whatever, right, you're still like, on Orca, seeing how people are swapping different exponent tokens or Camino tokens, or you learn about Henri, you learn about Solstice, you learn about whatever. And so it's a good for user acquisition moment. But then once they're inside the ecosystem, you can start to talk about, okay, there's some real things you can do here versus just gamble your life away on the next meme coin that comes out.
And on top of that, to talking tangibly, well, where that actually translates to in the Solana ecosystem, you have three major points that are undisputed. You have hundreds of thousands of developers, unique developers on Solana, more than any other L1 in the ecosystem. You have the highest number of on-chain dApp revenue from any L1 in the ecosystem, and you have the most amount of users in any DeFi ecosystem. Those three numbers are undisputed. They're out there in the market on Solana. There's a reason for that. People got excited about Solana for a lot of the meme coin growth, a lot of the early stage development, the easy path to dApp deployment. But now people are realizing this is actually a home because this has been battle tested more than almost any other L1 to date. And now we can actually deploy real institutional grade applications on it. And that's why we're seeing this massive influx of institutional capital and RWA applications specific to Solana.
Oh, I didn't know that. Those are pretty exciting numbers, and I'm excited personally about Solana. So I'm just glad to hear those points reaffirmed.
Now that you say that, you'll get your stoner shades in the mail, the rainbow shades here. That's how it happened. Yeah.
I wanted to ask you because you said it's an exciting time to be on the Solana network, like with the development activity that's going on there. But how Sasha and I have written articles about DeFi. We've obviously helped build quite a few DeFi protocols and token economies, but we've had this challenge of getting people excited about DeFi. And I think it's actually, ironically, one of the most exciting things in the world once you actually get in the weeds and understand what it's trying to do. But what challenges have you encountered in getting people excited about DeFi? Because, this first few iterations of the crypto space, people were, like you said, expecting moonshots and getting rich overnight. So how do you get them used to more sustainable, lower yield and more, I don't know, maybe it's boring or unsexy to a lot of crypto people that have been here for a while, but how do you get them excited about it?
You have to think about what user base. In physics, the major term that we always think about is what's it relative to, right? Your speed. It doesn't matter. There's no global speed. It's what speed you're relative to. And so with all these different yields, what is that relative to? The core crypto ecosystem relative to the players that have been involved since 2012, 2013, yes, it's not nearly as exciting as it used to be. But now we've all of a sudden are relative to the entire global retail base, which now are looking at DeFi as an alternative way to deploy their assets. They've never had access that have been this seamless, this cost efficient, this fast before. And now they're able to do it with full control over their assets, not like anything that they've seen in TradFi. So the user base and what DeFi has become relative to has expanded from a core group of innovators to now what we're looking at, full global retail adoption. And that's just starting to happen now with core applications across payments, across wallet infrastructure, across day-to-day integrations on your yield profiles, across investment allocation portfolio. I mean, you name it, you now have a full suite of applications to play into. And that is where the major change is happening, is where this DeFi ecosystem in total becomes relevant for. And that is the biggest market in the world that we're seeing now enter into DeFi.
I want to linger on that a little bit more. And we talked between us about this growing interest behind this market that's emerging, tokenized credit. And many people might be thinking of this more as like a DeFi evolution. We've seen a lot of change within the world of DeFi and the definition of DeFi over the past 1 to 2 years. Many people have been very optimistic about the massive influx of institutional capital coming into Solana and other networks. There was some concern as well that followed around that capital's impact on an industry that currently or at the time may not be able to sustain the promise of yield for all of that incoming demand. And I think the narrative has changed over the past year about what you guys have been talking about, real yield, on-chain yield that is not unsustainable. It's not mercenary yield. If $1 billion pours into a protocol, that can be accommodated. So, we're talking about tokenized credit in the form of, let's say, tokenized money borrowing, trade finance, corporate debt, and what Solstice is doing. Give us an idea of, the direction that things are going in the world of DeFi and how Solstice is kind of building to accommodate that.
Absolutely. I can start with that and then pass to Ryan. I think there's 2 points here that I'll make. The first is that the narrative, and I've been part of the institutional crypto adoption narrative for over 10 years now, you can tokenize anything, and that does not really matter. It used to be an innovation science project, to be honest. Tokenize a bond, now it's on chain. Tokenize an equity, now we can trade it a little bit faster, great. But the transaction finality and the fees between institutions, relatively negligible when you think about it over time. The major unlock happens when you bring the assets on chain and then you integrate them into all these different applications. The composability and integration of these assets, that's the key driving function. You all of a sudden have things to do with these assets rather than just sit stagnant in your portfolio. And a great example of that is our EUSX token. EUSX is a direct token that allows for you to get access to a leading delta neutral strategy, but that's not the end of the story. You invest once into a one-click yield option using your USX, you get access to a delta neutral yield token that goes up in value as we generate yield. Traditional financial asset, it's generating yield for you, you're gaining assets. Now, what else can you do? You can take your USX and you can go do things with it on Camino, Loopscale, Exponent, PTYTs, borrow, lend, loop systems, whatever it might be. You have all of these applications where you can put your capital to work. And the overall thesis here is simple. Maximal efficiency of your capital. You're optimizing yield at every single step of the way. And as Solana grows, there's going to become more optionality for you to become composable with those assets. There's going to become more risk profiles for you to deploy your assets into. And there's going to become a larger ecosystem for those assets to become more liquid in these marketplaces. So we're only at the start of this institutional RWA narrative, but as that grows, that's really the driving catalyst for where the value compounds. And that's really starting to happen as we've seen in the last 12 months.
Yeah, I think one of the things that crypto as an industry is now really scared of, right? Especially after 1010 is like leverage. But that's because we love to turn things on like, hey, why don't you just go get 100x leverage on something and just see how it works out, right? But leverage is like such an important thing in traditional finance, and that's what people have been doing for way longer than crypto has been doing leverage, and then burning ourselves out because we love to put 1,000 or 100 in front of everything versus like a nominal like 2 or 3 or 4, right? And if you can take any of the things that are being brought on chain, right? I think Ben said EUSX is a yield bearing strategy that's done in hedge funds, brought on chain and tokenized, and if you can take that in 2, 3, 4x the leverage. You talk to any institutional investor and they say, oh, I can start levering up this thing that I know very, very well. I know how to get out of a position if I need to get out of a position. I know how to, the risks associated with things. And you're telling me I can 3x the leverage on this. That becomes very, very interesting. And that is something that's not available to institutions in traditional finance. So that's why it's very exciting to see this money that's coming in, because they have way more of it than we do in crypto. And they're ready to come in, and they're sophisticated enough as users to understand what they're getting into. I think one of the things that I love about the crypto industry is we blindly follow the people on crypto Twitter because the next hot thing is the next hot thing, and let's go. And we are stress testing every financial primitive that's being built in this space. But there's downsides, and crypto as a user base loves the upside without the downside. As soon as the downside comes in, they call it a rug pull, they call it whatever, right? Even if it's just, oh, I didn't really understand the risk. The institutional users that are coming in really do understand the risks as they're coming in. We've sat through, I mean, not me personally, but I know Ben has sat through tons of due diligence conversations with a lot of these institutional partners to really bake into it. And they always walk away incredibly excited about the space after these conversations, right? And they're ready to jump into Solstice. They're ready to jump into Solana more broadly because they can see, Jamie Dimon was out there talking about how everything's going to be on crypto rails very soon, right? They can see the opportunity that's here, especially with like the trustless nature, the easy access to leverage, the finality that's really, really fast. And you can start operating at a whole new level from a financial infrastructure perspective. That's pretty cool.
Yeah, that's very exciting. And while we're on Equinox or the EUSD, we wanted to EUSX, we wanted to ask, like, this is a delta neutral trading strategy that has been net positive returns every single month.
Say that 5 times fast. All right.
Yeah, no, it's a mouthful. So how do you set the tone for what's next? Like, do you have any exciting alpha for what other strategies might be coming in the pipeline? Because obviously it compounds with more strategies introduced into the YieldVault.
Yeah, so I'll let Ben talk about the specific strategies, but I think like we'll set the stage for where where Solstice is kind of leaning into the Solana ecosystem. And I think you mentioned at the beginning this kind of yield as a service idea, but I think it's most people when they talk about yield as a service, if you look at a lot of other protocols that are out there, they have their one strategy, right? And they say, how many places can I put my strategy? Can I go put it on a card? Can I go put it in an exchange? Can I go put it in Stripe or whatever the case may be? And how do I bring the one source of yield that I have and put it in places? That's something we're thinking about, right? Don't get us wrong. We want to have, if there's stagnant capital, we want to figure out how to make that capital productive. You know, if you look at Starbucks, it's one of the largest quote unquote banks in the world. You have a bunch of people who have gift card money just in an app, and they go out and they make more money on that money by buying treasury bonds and all that kind of stuff. And so how do you do that for smaller companies? How do you do that for people? How do you do that for users? That's what we think about a lot. But there's not just us trying to get our yield out there. There's also so many other off-chain strategies that are generating yield. How do we take those, figure out the risk management system of what does it take, like we did with EUSX, what is the risk management strategy to successfully tokenize that, and then most importantly, distribute that as wide as possible within all the DeFi ecosystems. So it's how do you integrate that with lending and borrowing? How do you integrate that with other DeFi primitives? How do you get that out there in the widest space as quickly as possible? So the people who are taking the strategy that are doing it with their level 1 of leverage or level 1 of whatever financial product and engineering you can do, and then we turn it up to 11 by going and doing things. So we have a few more things that are going to be coming down the pike, which I'll let Ben get into.
Absolutely. So at a high level, look, we have a very extensive product roadmap for 2026. But again, it comes down to this thesis, right? Solstice is a DeFi hedge fund of the future, you can think of it as. It simplifies your access, no matter who you are, into this crazy world of DeFi that's going on. And so right now, what we're seeing is a couple things. Very simply right now, we have the playbook where you come in right away and say, I would like to get access to an institutional grade yield strategy that is risk off, delta neutral, market neutral. You're able to get access to that through EUSX. That is also primarily built for both retail and institutions, but it is catered very heavily to institutions. And why? It's for this reason. It integrates a trading strategy that executes on SEX exchanges as opposed to a truly DeFi play. We accept capital, we take that capital, we trade that on SEX exchanges in a managed, risk-off, fully attested, transparent yield strategy that we execute on multiple different highly liquid SEX exchanges. Now, why is that? As part of a delta neutral strategy, you're executing basis, you're executing funding arbitrage type trades. In those, you're taking perp positions and perp shorts, etc. That gives you exposure to auto deleveraging, which is ADL exposure, which could flatten your position very quickly. In SEX exchanges, there's a lot of different things, circuit breakers, time locks. There's things that prevent large-scale transactions from taking hits on those transactions. So we can't do those trades safely in the way that we have with zero loss for 4 years running this strategy now in the market with 100% month-over-month returns. We can't do that on things like Hyperliquid, for example, even though the yields might be a little bit juicier, and even though you might have full DeFi access from end to end, we still have to make sure that this is a product that we stand behind from a risk profile. So that's EUSX. That's our core strategy. That's what rips when the basis rips. That's what rips when we see the bull market come into fruition. What we're moving into, which is very exciting, is a multi-strat optionality. So as a USX holder, you come in and say, my risk profile looks like X, Solstice has product Y, they match, I'm going to go deploy my capital. Some of those, for example, that we're coming out with in a bit of alpha leak here, which we're excited to talk about, is Stretch USX, which is coming, STRC USX. STRC is a product given by MicroStrategy that effectively is a tokenized or is an equity play that gives access to the exposure of Bitcoin as the underlying asset. Now, with that strategy that MicroStrategy is really institutionalized, there is a lot of players in the market that have taken the steps to tokenize that stretch product and gain access for the general retail participants. What's more interesting to us is a managed yield product. So let's take it even more advanced. How do you manage and hedge out the downside risk? How do you ensure that you can enable all the composability functions of DeFi and separate those into two different tranches, for example? So if institutions are coming in with longer term, more stagnant capital, those are going to be able to access senior risk, for example, senior tranche, while low risk or higher risk, but higher yield functions for a junior risk or a junior tranche portfolio, they can get in there and access a much higher yield. Stretch in a product right now is yielding somewhere around 11% because of the Bitcoin yields on the underlying strategy. Now pair that with increased composability, which will allow for us to offer yields upwards of 20+% in the marketplace for the junior tranche and have managed downside risk because we're managing that hedge on the downside. That Stretch USX product is the next of a batch of products that are coming that allow for a fully customizable yield profile. So you have EUSX for the more straightforward, delta neutral, highly secure, risk-off strategy on the delta neutral side. You have Stretch USX for a multi-tranche solution for both institutions and retail. And then coming further, you're going to have more access to DeFi type products, DeFi type accessibility. So I can't tease all the products on this call. Ryan's going to kill me. But we have all these different products that are coming to market specifically that target the DeFi yields that are higher risk, but more DeFi composable in the marketplace. So
right,
a lot of players.
I'm putting away my pitchforks and torches. Okay, good. You didn't leak too much other stuff. All right, good one.
So by mid-year, we'll call it this year, you're going to see 3 or 4 products into the market from Solstice's perspective that a USX holder has access to, and they're going to be on a full risk spectrum. So that way, again, if DeFi is too complicated, you don't trust all these different things going on. Solstice has built this trust and in the marketplace for months now, since September 30th, the public launch, and for years with our trading strategy. And now it's time to open that up to other risk profiles.
Yeah, and so one thing to highlight too, I think that when we think about what we do when we tokenize a product and bring it on chain, it's not just like right now you can go get Stretch on Solana, right? I think it's a stock X or X stock, however you say it, right? You can go get that directly. But when we think about what we're tokenizing with the partners that we're working with or with the strategies that we're bringing on chain, we think about how do we make it a fundamentally different product, which is currently available through your venues, right? And so Stretch, if you think about Stretch in the very basic terms, it's how do you eliminate the volatility of Bitcoin, right? That's what Michael Saylor is trying to bring to the table. There's a lot of complexity and financial engineering that goes into it, and it's quite brilliant. He's basically convinced a bunch of people like, hey, like, you give me as much money as possible. I believe Bitcoin will be appreciate in value 30% over the next 4 to 10 years. And in the meantime, I'll give you, right now, I think it's 11.5% on that yield. And so like billions of dollars are flying in. It's wild. But so he's taking the volatility out of Bitcoin and putting it in a Stretch. And what we're trying to do is Stretch is still like a stock that trades. Sure, it should trade at $100, but it does vary, right? Up and down. And what we're trying to do with our product is essentially try and take some of the volatility out of Stretch to make it a more composable DeFi asset, right? So if you go and use it as collateral, it's got less volatility than if you were to use the underlying Stretch as a product, as you were trying to use that as collateral if you're going out and doing lending or looping or any of the more complex DeFi stuff that you see some of the people that are coming in, especially the institutions are coming in and doing. And so that's what we think about when we're thinking about Solstice. When we think about tokenizing a strategy, if you want to work with us in the future, anyone out there that does have strategies and wants to work with us, all ears, we'd love to chat with you and figure out how to work. We want to figure out how to make it a fundamentally better product. Not saying that your product's bad, but make it more composable within the Solana ecosystem. And we have a wide distribution network, but we're very good at making that product and taking it so it's usable in as wide of places as possible. So open, my email is open, so shoot me an email. I'll forward it right to Ben so he can actually get work done on it, because I got to go tweet. I'm a glorified tweet boy here at Solstice, but yeah, we'll get the work done for you.
Yeah. I'll finish with just saying this is the direct example of everything we just spoke about in the first half of this conversation. You can tokenize anything. Stretch is a great product. Stretch is a great example of this. You can tokenize Stretch, then what? Well, now with Solstice's integration coming, fully accessible by the composable DeFi applications, plug and playing, it's the puzzle piece into the DeFi ecosystem. That's what we mean by what we talked about earlier. That's the direct example of that.
Yeah, and you know that it's very exciting. Like once we were working together to build this, and we got excited about all the other options coming. But one of the chief complaints we've heard about DeFi is it can be like a full-time job to manage it. All the fluctuations, all the different plays. This month this is much better. This month, the next month something else is working much better. So how do you kind of think about that in terms of Solstice? Once you start to introduce more strategies down the line, do you think it's going to be harder to manage, or there's going to be tools in place, maybe agentic AI? We've spoken to some people that have said that they manage it completely with an OpenClaw bot or something like that. Do you have any clue on how that's going to look down the line?
I have the quick answer, which is what stuff that's available today. And granted, you need to do some due diligence and you need to figure out what tokens these vaults are working with, because we saw some stuff happen recently in the DeFi ecosystem, right? Exposure to things. And that's why it's very important to do your own research, even still. But vault curators and kind of the vault mechanics is a really good way today to be able to do that. Obviously, there's risks involved. We've seen it happen, but it's a really good way to let those other people who are in the ecosystem every day kind of chase those yields, right? We currently are integrated with Rockaway X as a great vault partner, Gauntlet as well, kind of being one of the assets that they use in a balanced portfolio to try and chase the best yield and return for the clients that are involved in investing in that. But then Ben has all the fun stuff that we're looking for into the future.
Absolutely. No, it's a really good point that simplifying the process is now on the managed yield side. That's where we come in. That is Solstice's value proposition to this global retail market that we talked about earlier. All of these new players coming in, let Solstice do the work for you. We are going to simplify that process. We're going to make it transparent. We're going to show our proof of assets. We're going to do this at an institutional grade scale, but we're going to simplify the entire DeFi navigation for you. And by that, with 0% management fees, 0% swap-in fees, you're able to access this in a very simplified fashion at a low cost. So now what do we do with that? There's so many optionalities. I'm not going to go through all of them today, but one of the things you mentioned was AI. This is going to be accessible on a very simplified UI on the Solstice website. But if you're an agentic allocator and you like to do that, all of our accessible yield strategies are going to be investigatable and have clear mandates that AI systems can go in and read and understand. That's the next stage for players like ourselves in integrating with agentic allocators, is becoming an agentic solution almost just by querying your data properly. All you need to do is ensure that your protocol can be read and understood by agentic allocation algorithms in the right way. What's the risk profile? What's the liquidity profile? What's the lockup terms? What's the risk analysis? Make sure that the agentic allocator solutions can look at it, understand the mandates, and clearly allocate to it. And if so, as one of the first players in the market that's going to be able to do this, we will be a fully investigatable product by agentic allocators. And that allows for everybody on the agentic side to come in and access Solstice as well on a one-click basis. That's the next stage. Once all agentic allocators are able to do that, then there comes the room of call it the next renaissance of crypto, where you have an automatic agentic solution allocating across all these different vaults in the most optimized fashion, which effectively simplifies and compresses the entire investment management process into the future. And that would be a beautiful future to reach to, because that effectively optimizes the entire investment process from start to finish. But that will be in years to come once everybody's agentically allocating.
It's very exciting, though.
Yeah, it's so exciting. This is why, we usually start every Boom Room interview in the same way. It's like, give us a rundown on who you are and your background, but we had to start with Solstice Finance because there's so many moving parts and there's so much exciting news behind this. And so before I continue, congratulations on that news. That's incredible. It's very exciting to hear that you guys are working with Michael Saylor's strategy and then bringing, let's call it, compound yield opportunities to Stretch through Stretch USX. And when we think about this at a high level, we take a step back. This makes a whole lot of sense, where you guys are creating a system that is essentially a win-win, bringing together these institutional capital allocators and everyday people that are interested in DeFi. And let's be honest, what is now considered sexy? It's stable, risk-free yield, right? We've had so many conversations with institutional and traditional financial players that talk about breaking into decentralized finance. There's a lot of opportunity there. I'm not sure how to approach it best. People are trying to hire experts, but now they have some avenue where they can enter into this space. They can introduce their foundational assets to a wider audience in a permissionless, compliant way, and they can compound yield through these strategies that are all on chain. And the other side of the equation, you have all these people that are familiar with DeFi. Maybe they're just looking for a place to park their capital while the world's falling apart, like we've seen the past month or so, and they want access to institutional trading opportunities. So that's really exciting. I want to kind of drive this conversation back towards our engagement and how we've been working together over the past 9 months or so. We've worked on a number of things with you guys. It's been incredible getting a really intimate view on how everything is unfolding. And one of the more interesting things that we've worked on is the SLX token. And I know there's a token launch coming up. And one of the exciting things specifically around this token that we worked on is the protocol design. And when we talk about tokenomics and protocol design for many companies we work with, sometimes it's a singular thing. Maybe there's the fungible token. Maybe there's like an off-chain point system. Maybe it's like a dual token economy for a GameFi type of product. But this was kind of like a full house where protocol design needed to be a little bit more holistic, where SLX, the fungible token, was tied to the USX asset, the EUSX derivative, products that you guys are launching in this Solstice one-click ecosystem, and the Flares growth campaign. And so I wanted to ask you, if you don't mind, in your own words, give our listeners and viewers a high-level understanding of how does this token tie in, and what is the long-term vision that you see in SLX helping grow the protocol and connecting these institutional players and retail DeFi participants that normally would never converge.
All right, let me give my marketing one-liner, and then I'll let Ben take over. Which is, if you love if you love EUSX and delta neutral yield, you're gonna really love SLX. So just we'll leave it at that, and then Ben take it away. Now that marketing spins out of the way.
I think it's important to note, you can answer this question in a lot of ways with what's the value of your token. And I think the easiest way is to understand that most yield profiles and protocols in the space, they've traditionally launched a token in this fashion. We have yield, it's not sustainable, we're pumping it with a lot of internal bags, and what we're going to do is we're going to launch a token to really skyrocket our yield so it's the sexiest number on the planet, aggregate a bunch of capital quickly, see if we can hold on to it, and then we're going to die out in 6 months. That's the traditional path with a lot of yield protocols to launch a token. The second piece is also the fact that you have this token that's out there in the market with no clear utility that anybody really realizes. You go in there and you have that increased incentive yield, as I mentioned, but there's no lasting effect of that token. So what's been incredible, especially working with Arcanum for so long, and you guys, it's been brilliant in order to design this in the right way. Solstice is really building for the long term and for scalable solutions. And I'll mention the scalable solutions specifically because of the fact that so many of these protocols in the space, no matter what profile of yield that they're offering, many cap out in either tens of millions, single digit millions, tens of millions, or at the 100 million mark. All of our strategies to date and the ones we're coming out to launch are built to scale to billions across the board. That is a tough design piece. That is not something that just happens. That happens because of thoughtful design of the architecture and thoughtful design of the tokenomics going into that. And SLX is clearly positioned for a long-term scalable growth path to scale these yield solutions to billions. And that's what we've been working on together so heavily with Arcanum, which we deeply appreciate. SLX is built to be that utility token across the ecosystem. It is the thread amongst all these multi-strat assets to tie them into the composable yield ecosystems that we're plugging and playing all these different profiles into. All these different Camino accessible systems, the loop scale systems, the exponent systems. SLX is the thread underneath all of that together. Now, what does it, multiple aspects of what you can do with it. SLX in itself is something that you can go out and stake and gain access on and generate yield from directly. SLX is tied to the ecosystem very heavily, so that way the increased growth in use cases of all of Solstice's products are directly seen and benefited into the Solstice ecosystem by SLX. Effectively, I want to say the success of the protocol on chain is really embodied in SLX in a very large scale way. So what you're going to be able to see is every single time that you interact with the protocol, whether you're providing liquidity pool management, whether you're getting your yield from a retail basis, whether you're deploying from a max cap scale from institutions, SLX is going to be forwarding your journey across all of those at every step of the way. So every integration, every deployment, SLX will be integrated directly into. And that is a story that is built to scale with the protocol. We're not coming out to market with an overhyped FDV that is unmanageable. We're not coming out to market with an unrealistic TGE goals that we're just going to try to shoot to the moon and then maintain. We're coming out with defensible numbers on all aspects with a heavy focus on ecosystem because of the fact that SLX only grows with the ecosystem use cases of all of Solstice's products. That combined as a story is Solstice's long-term growth path, which SLX is that line. SLX is the encompassing factor of everything going on in Solstice all at once. That's the function that you want with a long-term scalable protocol. And that's what the SLX token is built for.
I mean, we're also okay if the token does moon after everyone has a chance to get it. Don't get me wrong. Like we're okay with that, right? We're not going to say it's not going to happen by any means, but that's not what we're trying to manufacture or anything of that nature. I think one thing, right, is to think about to a lot of our conversation, we talk about like what's available in TradFi versus what you can get in DeFi, and what are the differences. And so one of the things that we are, because SLX is a token, it becomes a revenue stream for us, right? Like in the future, we're able to sell that token for OTC to generate dollars, and the more valuable that token is, right, the more dollars that we can do selling the token to partners and stuff like that in the future. And so what that gives us the ability to do is, whereas, for example, Stretch, right, we're talking about a product that we're bringing on chain, what we can offer is Stretch, if you go to buy it today, there's a dividend date. So 1 day of the month, you need to be holding Stretch. And then 15 days later, roughly the start of the month, right, is you get your dividend payment. And that happens once a month, right? And so you're trying to buy, get in, get out, or you're holding for 30 days, and then you're only getting your payment once every 30 days. What we are offering for us, right, is with Stretch USX, if you're holding and staking our SLX token, you can get instant redemptions on your tokens. That goes for EUSX as well, right? A lot of these trades in traditional finance have 3, 6, 12-month lockup periods. The reason that we are able to offer these things is because we have a different revenue source that isn't only the yield that's generated and the management fee that comes on top, right? And that's one of the beauties of what DeFi has to offer. And that's why we're making SLX so integrated into the ecosystem, is because users that come in can get a substantively better experience being SLX holders, because it gives us the ability to offer better services that you cannot offer in TradFi, because the revenue there, or the loss of revenue, wouldn't justify offering those services to the customers. And so it's a really exciting time for us, and we're very excited to offer the SLX token because it makes the user experience at the end of the day better for the people that we're working for every day.
It's a great point. I'll just finish by saying that SLX, to Brian's point, it opens the faucet, right? It opens that faucet of liquidity flow of all of these assets, all those instant unlocks and redemptions. That is an immediate unlock of liquidity across the ecosystem. That's great. There's one last additional point that I'll mention. We have SolStream out in the market. You go to solsticestaking.io. This is a full RPC solution that you're able to build and deploy on Solana using a low-cost, now free option for developers and teams right now to start building. Solstice enables this full toolkit for increased developer activity, which you're going to be able to pay for with SLX tokens. So as a new protocol and dApp in the space, you're going to want access to a stable token that's pegged to a US dollar, something that you're able to regularly transact with to show use cases of your protocol. We have that in-house. You're going to have capital on your platform, most likely, that's going to want to be optimized, which you can one-click access for optimized yield. And in doing so, you're going to be earning SLX, which can pay for your build costs on the deployment of our PC nodes directly. So that combination flow as well, it's all about enabling that whole ecosystem. So together with everything Ryan just mentioned on that unlock of liquidity, plus the builder functions that we're incentivizing builders directly to promote that activity across DeFi, that SLX utility should be very clear to the market, especially with the heavy focus on the ecosystem to the tokenomics.
Yeah, this is something I loved about working on this project collaboratively with you guys. The big challenge was, how do we tie together all of these different things that we're doing? And Solstice Finance is a true ecosystem. You guys have assets, you guys have strategies, you guys have yield accrual, you guys have products, and then you have services, right? And so this was the big challenge in how do we create something within the user journey that allows people to access things, but also leads them along progression. And so this is the thing that I love about SLX. People can earn SLX by contributing across the protocol. They can use assets like USX and EUSX. They can take that SLX and access products and services. And it ties into what you're really doing on the DeFi front. You guys are, for lack of a better way of putting this, creating your own real native DeFi products and services that allow people better opportunities, potentially better terms than what exists on the market currently through, let's say, Solana DeFi, like Exponent or Camino or whatever. So I really do love hearing that from you guys as well.
People are saying we're kind of like the up and coming Apple of DeFi, right? Vertically integrated soup to nuts, like really taking care of our customers from the start to the finish, all the way from, the factory of the yield, all the way to the delivery of the product when you have it in your wallet. So people are saying this is what I'm hearing I live on crypto Twitter, so of course I see that people are saying this.
I'll take your word for it.
Thank you.
While we're on SLX, one of the things we didn't really talk about yet is governance. And you guys are veterans of the industry, and Sasha and I have worked on governance systems before. It's probably one of the hardest things to pull off is like a truly representative asset that helps with governance, or a governance system that works efficiently. So how do you kind of envision this handover to the greater community as time goes on, maybe for introducing new strategies into the YieldVault, for example? And what role do you envision SLX playing in that handover, basically?
Yeah, I think it starts. Smaller and grows into something bigger. But I think like the way that obviously once you've seen some instances where you hand over the protocol, and a lot of people are competing for how do we make this token price go up as much as possible to potentially the detriment of the actual protocol itself. And so the way that we think about it is less of the idea that you're going to be able to vote on every single thing that happens. But I think as we're working with partners or we're working with ecosystems, right, it's a governance around, hey, like right now we're partnered with Loopscale and Camino and Exponent, but maybe there's like an up and coming Perpstex or something on Solana, or there's something else that's going on, right? How if that community wanted to come in, and as we have future SLX flares or flares for the ecosystem, or SLX rewards that are going to different communities, that community can come in and say like, hey, we're setting this thing up. We'd really love to integrate USX, EUSX, any future products that you guys are releasing into our ecosystem more fully, and we'd love to divert more rewards over. If you can put that into an ecosystem vote and point in that direction, right? It starts to become this, how does other people that are interested in growing the Solana ecosystem, how do they use USX to do so and help juice their own protocols or ecosystems? So it's a little bit different than like, hey, you get to vote on like the color of the banner that's on the website and every little detail that comes through, and starting kind of smaller, and how do we position and grow in a targeted fashion that relates to the community the most, right? If we learn that a bunch of people are using this new thing as opposed to PTYTs, all of a sudden I'm just going to make up some letters like LQs and TWs, and it's probably actually a financial thing that I'm saying out there, but I just don't have enough knowledge on that. But right, and so that becomes the hot new thing, right? The community can come in and say, we'd love you to divert rewards there because we're going to go use that anyway. So we might as well get rewarded for doing what we want. And that helps that ecosystem grow. It helps our users grow. It helps us grow. So those types of things. That's how we're thinking about governance, at least at the first stage, before, we give the decentralized cypherpunk everything over and we drop the keys, drop the mic, burn every bridge behind, all that kind of stuff, right? That we want to do.
Absolutely. I'll just add very simply that it will be a pathway. This is something that the voting mechanisms, and unfortunately, a lot of the protocols still do this. They have the voting mechanisms in place, but who owns most of the protocol votes for the governance token is the foundation. So it's kind of this like pseudo decentralization voting. Now, in practice, this is a great step forward for decentralization, which we are very clear advocates for. But what we want to do is usher in all this institutional capital through RWAs into that world of decentralization together. So we're going to be riding the wave of DeFi as this institutional growth happens, with slowly unlocking more and more decentralized features out there. So it's going to start with some basic governance features around the most simple dynamics of the protocol, whether that's access to instant yield unlocks, other access to new types of yield profiles, etc. And then it's going to move into much more integrative work as the community evolves with it. There's only a very small subset that actually use governance tokens and vote and be active in the governance process. We want that to change, but we will change with the industry with that as we slowly unhook our ties to CeFi and our ties to centralized processes. So this will happen as an evolution.
Incredible. I'm very excited to see how this unfolds. And like you guys had mentioned rightfully before, SLX is something that we had all worked on together and designed to really evolve with the growth of the platform. And when you get to, like a TVL milestone, bringing on $1 billion, there are so many new things that are enabled. There are new products that can be packaged. There are new services that can be provided. And I think people are going to be very excited to see what you guys have on the token, but also the development roadmap. I want to kind of take another step back and talk more on like let's say a founder level, in our experience working with you guys on Solstice Finance around the protocol design, around the token economy design, around creating risk management platform and infrastructure for you guys to be able to manage your assets across the entirety of Solana, we have learned so many things about the DeFi space, stable coins, yield accruing derivatives, everything. And we feel like, as a result, we've kind of become experts in this area on how, to work with different protocols, balance incentives, reduce risk, etc. For our listeners at home, because I know both of you have wildly diverse backgrounds. Ben, you've been working within finance for a while. Before that, you were involved in physics research and you went to school as a physicist. Ryan, you're coming from more of a expert marketing background. What are some of the biggest lessons, takeaways, or really exciting points that you've uncovered in this journey in starting Solstice, specifically within the boundaries of DeFi?
I think it really comes down to one aspect, which is really reminiscent about why we chose Solana in the first place. And I always say this about Solana, is that culture is the catalyst. And a lot of people talk about culture, and a lot of people talk about this dynamic in a lot of ways in startup culture. And there's a billion books you can go read on how to optimize this. But at the end of the day, it's very hard to launch protocols in the space where people trust your capital with hundreds of millions of capital, albeit that. But to get to a point where you build a secure infrastructure and a valuable product to the market, you need the team to be in sync on the mission that you're going after. And very simply from the start, we came up with something very simple, which was, institutional yield, democratized access. A very simple thesis. And I spoke to the team very heavily in the early days about this thesis, and it needed to be representative of the culture that we curated within Solstice. And I always mention this, we don't have room for ego in the company. This is a human-first protocol. And what we mean by
my
that
ego is obviously the most important, but outside of that, yes, we have no egos here.
Outside of Ryan's, outside of Ryan's, but we love Ryan's ego to run free in the social media world. This is the main thesis: is that if you create a company that all the employees together and all the team members together are working together towards a mission that actually makes sense to them, they need to be passionate about what they're working on more than just a day job. This needs to be something that they truly believe in over time. And this is always something that a lot of protocols, a lot of teams, a lot of companies in general say this. But in practice, in this idea of institutional yield, democratized access is the core thesis of all of us as human beings, of saying there should not be barriers to entry of these type of yield protocols and yield strategies. Financial freedom is something all of us should be able to achieve in the most simplified basic processes. I always joke about how the future state is a bunch of agentic solutions transacting stablecoins to each other, but I'm excited for that day. And why? It's because it abstracts this idea of financial freedom from all human beings across the world. And so having that thesis be integrated at a core level and making sure the whole team understands this is what we're working towards. Every day you wake up and you work at Solstice, and every day you work at the company, you are aligned on something much broader than just, I have to check my Slack messages and email every day. It has to go deeper than that. And if it doesn't, the company shouldn't exist. It's that simple. And so as much as we're on the bleeding edge of DeFi and of tech in general, fintech in general, you need to be on the bleeding edge of these culture dynamics, which means, we have a fully decentralized team across 14 countries. It's fully remote work. We're on calls 24/7 all the time, but it's not about, let's make sure we're online every single day from 9 to 5, and I'm going to make sure people's mouses are online every single day. And
I have my fan that has the thing moving my mouse
exactly
every day.
That is dystopic, the fact that exists in the world. You need to allow for complete freedom in the company, and people take either liberties or they take it and with ambition. And then you get to realize which team members are really going to be part of that core team. And that's why we've had such a high retention rate at Solstice with the team, which has been fantastic, because of the fact that we give that freedom out to all of our team members, very much so. But with that comes great responsibility to deliver on this broader mission. So I focused on the culture point to answer your question, but I think that most impactfully has been, more than anything, the reason why we as a team, through bear markets, through war, through crypto liquidation, flash crashes, we've been sticking together on all aspects of this in a very strong way. And it all comes down to culture.
It's a very good point. Well, I just want to say real quick, this is important because you guys have hit some great milestones. The Equinox Fund EUSX, I think there's, 100% of months that's been active have been positive net returns, which is huge. You guys were able to launch the USX real world asset with $160 million of institutional capital. And I think it's reaching close to 400 million now. So like the widespread use, demand, and integration across Solana is incredible. And I think, the focus on the culture and making a place where we all want to work because we're impacting a change in the industry, that comes through, it shines through. So thank you for sharing that.
Well, I think this also translates to what I was saying is like, we've been working with you guys now for, feels like forever. We've been working with you guys now for 9 months. Right. And I think it's like, we work with a lot of outside consultants and agencies as well. And I think they also feel that, and hopefully you guys feel that the dedication from us, but also the dedication from you guys, because this is like what we feel is like a substantively like amazing product to bring to market. But you guys have helped us build a lot of this stuff. A lot of you guys were mentioning kind of the risk profiles. Like one of the things that was the biggest learning to me, right, is I've worked in a lot of different things, go to market, business development, growth, all that kind of stuff. But the amount of effort that it goes into maintaining a stablecoin on a DeFi, like once something's out in the wild, right, you have a wide surface area of attack. And so the amount of effort that goes into that, the risk dashboard that you guys have built, granted, I don't use this on a day-to-day, but I see the screenshots when we're working with our market makers. A lot of the market makers come back and they're like, you guys are the most proactive team being able to like give us accurate predictions of where the token or what side of the LPs we need to be on, all of this kind of stuff. And so it's been really exciting to see like the dashboards that you guys helped us build and whatever being used like every day within our, if anyone out there is looking for the help, talk to Sash, talk to Carmelo, all right? Because like they are going to help you out and get you up and running with a lot of the stuff that they've built. Because again, it's like it literally every single day I see like snapshots, it's like screen grabs of the dashboard that we're sharing across the ecosystem to make sure every single partner that we're working with knows exactly the parameters that they need to be measuring against, what they need to be hitting, and where they need to be. And it's like, it's just been amazing to see. And it makes my job really easy because then I just get to talk about the good things all the time as opposed to all the bad things that we could be talking about.
Thank you for the kind words. Yeah, it's been a journey for all of us, I'm sure.
I think we got to start wrapping up, but I didn't want to let you guys off the hook, especially you, Ben, because I know you've worked in policy and in shipping policy in the US, working in the public sector. And Sasha and I are actually working on an article right now talking about tackling the Clarity Act and this tension between Wall Street, traditional finance, and the crypto industry, exchanges versus banks, the war of yield, let's call it. I wanted to get your read real quick on what you think is happening with the Clarity Act battle right now and what you foresee happening in the future and how Solstice sort of ties into this, the future of Solstice.
The U.S. is a very funny place when it comes to regulation. We are not forward pressing. However, it is a catch up constantly. And so right now, stablecoins have become such a killer app across the world that the payment side of the businesses from apps and card processors, et cetera, they realize the battle's already lost. And that's why we've been able to see great clarity from the Clarity Act around the fact that that's how stablecoins are going to be used and integrated. And I think based on the types of categorizations they have, I think it's a great step forward. Now, when it comes to the yield dynamic, which is very pertinent to Solstice, that's a dynamic that touches on a whole nother side of the industry that U.S. banks and U.S. asset managers and investment managers, they're not ready to give up yet. So what they said was, okay, we'll secede on stablecoins. Global retail has won. You guys built a great application. We love it. We'll integrate it. We lost that side of the business. Fine. But now on the yield side, that's a much broader market that addresses lots of other things. And that's why they've effectively just cut the yield dynamic off and said, nope, that classifies as something completely different. You have to register and do all these hoops and jump through all these hoops in order to get that through. That's going to be the next stage of the Clarity Bill. So I think it's a step in the right direction, but does the Clarity Act solve the problems of DeFi? Absolutely not. Yield is a right. Yield is a human right that all of us have access to, in my opinion. This is something that everybody in the entire ecosystem on a global retail basis should be able to have one-click access to from anywhere in the world. And that should not be high-guarded and high-watermarked by all of these high-fee institutions that do lots of unauthorized things with your funds constantly. There's a reason why if there was a bank run on any of the major banks in the US, they would not have the capital to suffice that because they're making money on your money consistently. So that's what we need to be pressing harder for as an industry. We need to press for that yield clarity, and we need to press for that yield democratization more than ever now, because we should not just say, oh, clarity's gone, we're all good to go. We started on step one, but step two is the bigger one, and that's the yield dynamic. That's what we really need to get forward.
Yeah, I mean, that's the whole point, right? It's not about the actual technology. It's about that. If you distill it down to one thing, it's everybody has equal access to everything.
It is wild to gatekeep yield. And funny enough, we had Ryan from Global Stake on the Boom Room a few weeks back. And Global Stake is an institutional staking infrastructure company. And he's also, well involved in a lot of policy discussions in the US. He said the main justification that banks are using is that they fear deposit flight. And it's wild that this is what, this is the center of the discussion. Please don't do this because we'll lose business. It just blows my mind that, this is the pushback they're getting. We've got
I'll always just say that it's the last point I'm at. This is the point that I always stick. You can call crypto crime season from 2015 to 2018. That's been the global financial system since 1930. Okay? Things that they're doing with your capital are, especially for those who have worked on Wall Street like myself, it is so much worse than the DeFi aspects in general, especially for the protocols and teams that are developing real apps. It needs to change, and it needs to change now.
Incredible. We've got to wrap it up, guys. But before we do, we're going to ask you one question that's maybe like a little bit off topic, but again, very useful for our listeners and viewers who are both investors and founders primarily. And so this is a question I'm sure many of you guys have encountered before. For people that are watching or listening at home, I want to bring it back to basics. What is one piece of advice from each of you, advice, tips, or tricks that you can offer to aspiring founders out there that might be interested in taking their step into starting something new or growing their company or persisting through, let's say, a challenging time, especially given what's happening in the world today?
There's a quote that always sticks with me that I think has been one of my strongest quotes that I've always relied on. There's a lot about perseverance and breaking through the tiredness and the always there's two bad options in front of you, create a third, right? Like there's all those type of perseverance pieces that I think are really strong. But the main one here is to have something that you've never had before, or to do something that you've never done before. To have something you've never had before, you need to do something that you've never done before. So if you want to have a decentralized hedge fund that's never existed before, you need to do things, build things, create relationships, create technology, create solutions that have never been created before. So you need to always be able to take that risk and take that step forward. So you always got to remind yourself, if this is something that we want to have in the protocol, something we want to have for our solution, for our DApp, if we want something that's never been there before, we need to do things that you as an individual, you as a team, and maybe even you as an industry have never done before. So that means taking that step into the unknown. And if you don't, you're subject to stagnation, and you're subject to being in the same exact place that you started.
My bit of advice, now how many startups have I been part of now? The one piece of advice I read one time that I thought was really good, and especially it becomes much more poignant when we have Mythos that's going to break out of its shell and like take over the world and hack all of our lives to smithereens, all that kind of stuff. But the time to market for products right now is essentially nil, right? And so first-time founders, they want to make a perfect product. Second-time founders want to find distribution. And so right now, especially getting that distribution channel and finding where your customers are going to be is the one thing you should be thinking about. We luckily with crypto, right? Exactly what your customers are looking for. Customers are looking for points. They're looking for a future token. They're looking for yield. They're looking for whatever. And luckily, there's a lot of great DeFi protocols out there. Like we work with Camino and we work with Loopscale. People who already have customers that are looking for new sources of yield or looking for new mechanisms that they can trade on. So learning what that is, I think, especially if you're building within the DeFi ecosystem, learning where potential customers are going to be. They're not going to come to your website, right? They're going to find you through a partner ecosystem first, and finding and working with those ecosystems will 10x whatever amazing product you can spin up with AI in the next 24 hours. So That would be my bit of advice.
All right. Great. Two great answers. And it wouldn't be the boom room without asking you this last question, guys. So sorry, we have one more last question for you.
Shoot.
Yeah, I know. We got to keep you on for a few more minutes.
I know.
The only rule is you're not allowed to mention anything you're working on or working with, but we want to just see what you're most bullish on for the next 6 to 12 months, basically. It can be an industry, it can be a company, it can be a piece of technology. So anything that you're bullish and excited about. But before you do that, I want to remind everybody that's watching to check Solstice out. Check out the show notes because we got some amazing links down below.
Subscribe, all that kind of stuff.
Yeah, subscribe. Yeah, smash the subscribe button. Leave some comments too. We like reading them. Even if you're making fun of my haircut or something, it's okay. So let's hear it. What are you guys bullish about?
I would say two things. For me, number one, first and foremost, is the Solana ecosystem. Stablecoin growth, when we started building, that was at 2 billion of volumes, and now we're over 17 billion. There's over $2 billion of RWAs on the Solana ecosystem that didn't exist last year. This is a growing ecosystem with the most amount of users, with the highest amount of DApp revenue, with the most amount of developer ecosystems in any L1. Solana is easily the biggest thing that I've been bullish on for lots of years, and now even more so in 2026. So Solana, I would keep your eyes on very heavily. And more specifically as well, another application layer that I'm very excited about is Hyperliquid in general. There's a lot going on in the Hyper ecosystem, and I'm very impressed by their tokenomics design and modeling. And I think it's probably one of the hottest applications that's going to break the ice for global retail in a lot of ways. Just like the ways that Polymarket is done in this very user-friendly way, I think that Hyperliquid is doing a great job at showing the benefits of DeFi from a trading aspect for the broader retail market.
Yeah, definitely agree with that.
And I say this not because we're launching a product, but the thing that is very exciting to me and the thing that I'm most bullish on is Stretch, just as a product in general. And again, this is not. I'm excited about Stretch USX. It's going to be a great product. But Stretch itself, like the fact that Michael Saylor has convinced TradFi to give him billions of dollars to buy Bitcoin, and that's it. Like there is just 6 guys in a room, and their only job is to how much Bitcoin can we buy and how fast can we buy it? When he was at the Digital Asset Summit, the Blockworks event, Michael Saylor was on stage giving a keynote about Stretch. And it's just this amazing moment that because Michael Saylor is just a total G, he was sitting around and people were like, what are you doing with Bitcoin? What's going on? My answer is, I'm buying all of it. And so what that does for the greater ecosystem of crypto, last week, 3,000 Bitcoin was mined. He bought 15,000 Bitcoin last week. Like it is insane that we haven't seen the price movement and the price action that we should see on this kind of stuff, right? And that's only going to continue. I'm trying to pull up the website right now to see like how many billions of dollars. And this is just going to continue, right? That's why it's just so exciting because, as we all know, right, the rest of our industry is very tied to the price of Bitcoin at any time, right? And so everything else that we're doing all day long, if this continues to occur, and if people keep giving Michael Saylor billions of dollars to buy Bitcoin, like all of us sitting here, all the people that are watching and care about this stuff, like we'll be doing all right. So it's very exciting.
And every season is Michael Saylor discount season when it comes to Bitcoin.
Yeah. It's always really funny too because they're buying so much of this, and every time they put out the announcement about how much they bought it for. Granted, they're buying at levels that I would dream about, right? But it's always above the price of what Bitcoin is. It's like, what are you guys doing out there? Like, how are you buying it always at a premium? But it's please keep spending billions of dollars on Bitcoin, Michael. If you're listening to this, please keep doing it.
the long-term strategy. Guys, it's been an absolute pleasure having both of you on, speaking to both of you about the foundations and future of Solstice Finance. Again, just a quick reminder for our viewers and listeners, if you are interested in learning more about Solstice Finance, their products, their offerings, their services, check out the links in the show notes below. We're going to put everything there, including some social links for Ben and Ryan as well. And again, one last reminder, if you're interested in listening to more exciting Boom Room interviews, if you just like our pretty faces, if you want to call us bad words, just engage below. Go ahead and leave a comment, tap that like button, follow us and subscribe, and check out our fun Telegram community as well. Make sure you tune in for the upcoming SLX token launch. Very exciting what this asset means to the protocol, what it means to these two handsome gentlemen here, and the future of what it holds when it comes to Solstice Finance and tokenized real-world assets, tokenized yield opportunities. Ben and Ryan, again, thank you so much for coming on, guys. Very excited to see you guys again and talk more about this.
Absolutely. Thanks so much for having us. And for all the partners that are looking for a good tokenomics partner and structuring partner in general, Arcanum is top of their game. So I'll show you guys as well. It's been fantastic working with you guys. So highly recommended.
Thanks,
gentlemen. I always feel like imposter syndrome. Take care, guys.
Thank you, guys.
Ciao, everyone.
Cheers.
Ciao.
Bye.